As part of its stipulated order, 9 years ago, the Guam Waterworks Authority borrowed over $100 million to make massive improvements to the island's water and wastewater systems.
It financed the repair of the northern and the GWA wastewater treatment plants. It provided meter money. It provided other capital improvements that we have been benefiting from since 2005.
In New York today, all it took was a half hour to create $14 million in savings for ratepayers. According to Consolidated Commission on Utilities Chairperson Simon Sanchez, GWA and the Guam Economic Development Authority were successful in refinancing their 2005 bonds.
It's closer to about $80 million. We've paid off some principal, but we were able to lower the interest rates quite significantly. It was 5.6% in 2005, and we were able to lower it to 4.3%, so saving almost 1.5% in interest.
Almost immediately, the $85 million bond issue was oversubscribed, with several firms each placing orders for over $30 million. Of note was the fact that several firms that didn't previously invest in any Guam credit entered into the bidding for GWA's bonds.
We had tremendous interest in this borrowing. While we were only trying to borrow $70 million, there was over $700 million worth of offers, 10 times more than we needed.
Today's transaction follows national media such as Bloomberg reporting that the biggest returns in the municipal market are coming from Guam. Bonds have surged 10% in 2014. Quote, that's better than all states and fellow U.S. territories, Puerto Rico, and the Virgin Islands.
They really view Guam's bonds as good value. They're going to get repaid, triple tax exempt. So, all in all, everybody got a benefit. The bondholders are happy that they have a reliable investment, and most importantly, Guam's ratepayers are going to save $14 million in the coming years.
Sanchez adds, although ratepayers will not see an immediate reduction in their water bills, the savings will be realized over the long term, starting in 2020.
And you're probably going to see maybe a 3-4% drop in your rates then, and then in 2033. We will actually pay off this loan, saving 2 years of debt service. So that's another 5-7% in the 2030s. We wish like anyone, we'd love to accelerate it sooner. But if you do it sooner, then you reduce the amount of savings for the entire community, and you reduce it for the life of the loan. The PUC consultants really wanted to maximize the savings for ratepayers, and while we did too, we would have preferred to move it up a little more, but that was the compromise between the PUC consultant and us, and it did maximize. Over the next 21 years, it's the most savings we could get.
The closing for the bonds is expected early next month.
So we respect that. I mean, there's ratepayers now, and there's ratepayers 20 years from now, and if we say